A very warm welcome to all of you to the FinMet Mondays podcast. Thank you so much for tuning in. Sunil, a very warm welcome to you as well. We are at the cusp of history, or we've already created history when we talk about gold. Record highs in the metal, 35% growth just this year, staggering heights. What did you make of this move? And any tips or any pointers for our listeners?
I think what you mentioned about historic is correct. It's a historic move this year. Given the fact that we've had decades where the gold price hasn't moved more than 20%, and suddenly now in less than 9 months we are seeing this huge increase up. I think it's a function of the fact that the financial markets are in somewhat of a turmoil. The It's very clear that the stock market and the bond market rally has been very strong, but people are unconvinced about the future, especially given the election that's coming in November. And what you're seeing is a rush of money into gold from investors. We've been checking around to see whether there's physical demand in terms of the actual gold demand. And what we're hearing is that in China, demand is close to zero. India imports also have slowed down quite a lot. So overall, physical demand has been very slow. However, investment demand is very strong. We're hearing about private wealth funds. We're hearing about ETF flows, and so generally, what we are seeing is that there is a long-term investor kind of approach towards gold. Even talking to our friends who deal with central banks, what we're hearing is that central banks purchasing has been strong this year. It's slowed down with the Chinese maybe not doing as much, but in terms of other countries, especially countries who didn't in the past buy gold, they're seeing more and more interest in people wanting to know, new central banks wanting to know how they can invest in gold. So overall, this investment diversification story of gold is the one that's taking gold up.
Question definitely remains, where are both metals, gold and silver, going to head from here? Let's quickly look into the technical outlook for the coming week. It's on the Thursday morning and Friday when New York opened, when we really saw this break above 25.30, which is now the new pivot. And currently on Friday, the metal has closed at sharp 25.80. The new refreshed resistance levels are the following. The first resistance is at 25.97 to 2600. This is where we would expect, not just psychologically, but also technically, there is a stop here. The second is a $50 move higher at 2650. This is also both psychological and technical, and I'll show you how these have been arrived at. On the downside, we would like to understand if there is a potential for a correction, where would the metal stop? And that level is simply the 25.30 level, the same level that the metal was struggling to break above, is going to be a level where the metal might pause if it corrects on the downside. There's one thing that to note, Sunil, which is you do see a break above this 25.30 to 25.40 zone and a direct $40 to $50 move up continuously. Now, what this has led to is slight overbought conditions on the RSI that you can see, but also secondly, you can also see that the volumes accompanying these moves have not been something that have been significantly above average. They've been very much around the average level. So this calls into question the real strength of this move. Yes, there is a lot of bullish momentum, but also there is going to be some amount of anticipation for the Fed's FOMC decision this week before the metal can really extend the highs that we saw last week. So I would expect that we would kind of fall back into this $20 zone between 25.50 to 25.75, and then we might want to then pull back and then head into the 25.95 resistance. So this is probably the trajectory that we might see, given that the sharp trigger that we saw, it would require a slight pullback for new buyers and fresh buying action to take in. Even on US spot silver, something very similar. You see a descending triangle pattern being formed where a clear support has been defined from a long-term perspective, and you see a descending trend over here. And the markets have exactly paused at the confluence over here, where there is a resistance that it has to break somewhere around the 30.7 level. So you would expect this level to be broken first before the metal can then make a move and head to 31.5 as well. So this would be some of the stops that we would have to take note. in US spot gold and silver. From the economic calendar, we know that on Wednesday midnight, we have the interest rate decision that is going to come. And currently, we are at a 50-50% probability for either a 25 basis point rate cut or a 50 basis point rate cut. It is not exactly clear where the Fed is, which decision the Fed is likely to take more. In my opinion, a 25 basis point rate cut is what the Fed would like to do. So this is a quick outlook of how we expect prices to trade in the next coming week. There might be a slight pullback in gold, followed by a test of 2600 positively. Similarly, in silver, you might see some consolidation in the first 2 days before a move back to 31.5. Well, thanks, Sunil. Thank you for sharing light on from the fundamental side as well. Let's see how the markets play out. This is probably the most anticipated week in 2024, given we've been talking about rate cuts, rate cuts, rate cuts for the entire year, and we are finally here in 2024. So let's see how it plays out. But till then, thank you so much and goodbye.